property in Puerto Rico.
Beautiful island.
We've got a fantastic expert with us to break it all down. Walter Rivera-Santos is a licensed real estate broker in Puerto Rico, and he's here to share his insights. He's got this awesome platform called Brain Theme Park, which is all about making the process of buying property in Puerto Rico easier to understand.
That's the goal.
We'll be talking about mortgages, loans, all the stuff you need to know to make an informed decision.
Important stuff, for sure.
I realized that a lot of people coming to Puerto Rico to buy property, they were really intimidated.
Different place, different rules.
Exactly. The legal aspects, the financing options, it can all seem pretty overwhelming. A resource, a platform that simplifies things, breaks it down into plain English.
Demystify it all.
Exactly. That's Brain Theme Park in a nutshell. It's all about empowering people to make smart decisions when it comes to Puerto Rican real estate.
Awesome.
All right, so today we're going to do a deep dive on conforming versus non-conforming loans.
Okay.
If you are even thinking about buying a home,
Yeah.
you got to understand this stuff.
It's important.
Because this could make a difference of thousands of dollars over the life of your loan.
Sure.
And just a little juicy tidbit right off the bat.
Yeah.
The baseline conforming loan limit for 2025 is set at $806,500.
That's a lot of money.
That's a pretty big number.
Yeah.
And so that really defines what falls under conforming and what doesn't.
Right. And that magic number is set by Fannie Mae and Freddie Mac,
Okay.
which are these government-sponsored enterprises that buy loans from lenders.
Gotcha.
So what that does is it helps keep the mortgage market liquid
Okay.
and functioning smoothly.
Okay.
So if you are looking for a conforming loan, it needs to fit within Fannie and Freddie's guidelines,
Okay.
which covers things like the loan amount, your credit score, and your debt-to-income ratio.
Okay, so conforming loans are kind of like the model students of the mortgage world. They follow all the rules.
Exactly.
But as a borrower, what's in it for me?
Yeah.
Why should I care if a loan is conforming or not?
Well, there are some pretty sweet perks to conforming loans.
What?
Because they can be sold to Fannie and Freddie. Lenders see them as less risky.
Okay.
And so what happens when lenders feel less risk?
They charge lower interest rates.
Exactly, lower interest rates.
Awesome.
That's all about balancing that risk and reward equation.
Makes total sense.
Yeah.
Lower risk for the lender equals better terms for the borrower.
Right.
Now, I've also heard that conforming loans make the approval process a lot smoother.
Yeah.
Is that true?
Absolutely.
Okay.
Because they're following these standardized guidelines, the approval process is often more streamlined.
Okay.
Lenders know exactly what to expect,
Okay.
which can speed things up.
Gotcha.
And time is money, especially in a competitive housing market.
Yeah, especially these days.
Yeah. And, one of the things we really wanted to focus on today is the whole mortgage and loan situation.
Right. That's the key.
Because I think a lot of people assume it's the same as buying property anywhere else in the U.S. One of the first things to understand is the distinction between conforming and non-conforming loans.
Conforming and non-conforming. Let's break that down a bit.
All right, so conforming loans, these are the loans that basically follow the rules set out by Fannie Mae and Freddie Mac.
Ah, the big players.
Exactly. Government-sponsored enterprises, they set the standards for what's considered a safe loan.
So lenders are more comfortable with these loans.
Generally, yes. And that usually translates to lower interest rates and more favorable terms for the borrower.
Gotcha. So conforming loans, good deal.
Potentially, yes. But here's where things get a little tricky in Puerto Rico.
Oh, what's the catch?
The availability of conforming loans can be more limited here than on the mainland.
Interesting. Why is that?
Well, Puerto Rico, even though it's a U.S. territory, it has its own unique economic and legal landscape.
Different ballgame.
Right. And sometimes that means properties here might not fit neatly into those conforming loan boxes.
So what happens then? No loan.
No, not all. That's where non-conforming loans come in.
Okay, non-conforming loans.
They don't have to stick to those strict Fannie Mae and Freddie Mac guidelines.
More flexibility.
Exactly. So they're often a good option for people buying unique properties.
Like a historic building in Old San Juan, for example.
Perfect example. Or maybe you need a larger loan amount than what conforming loans allow.
Big dreams.
Or maybe your financial situation is a little less conventional.
Right. Everyone's got their own story.
Non-conforming loans can provide solutions in those cases.
So they're a good thing.
They can be, definitely, but of course there's a trade-off.
There's always a trade-off.
Because they're seen as riskier by lenders, non-conforming loans typically come with higher interest rates.
Okay, that makes sense. Higher risk, higher reward.
Something like that. And they might have more stringent requirements too, bigger down payments, things like that. And that's where having a local expert on your side can be invaluable.
Someone who knows the ins and outs of the Puerto Rican market.
Exactly. They can guide you through the options, help you find the best loan for your specific situation.
I want to touch on something that I hear come up all the time with conforming loans,
Okay.
and that's private mortgage insurance, or PMI.
Oh, yeah.
Can you break that down for us a little bit?
Of course, PMI is basically an insurance policy that protects the lender if you default on your loan.
Okay.
So it's usually required if you make a down payment of less than 20%,
Okay.
because the lender is taking on more risk.
Yeah.
If you imagine you only put down 5% on a house,
Yeah?
and then you suddenly start making payments, the lender is left with a bigger potential loss.
Right.
So the PMI helps mitigate that risk for them.
So it's an added cost for the borrower,
Yes.
but it can open doors to homeownership
Exactly.
for those who don't have, 20% laying around.
Yeah, it makes it more accessible.
Exactly.
And here's a key difference between PMI on conforming loans and mortgage insurance on other loan types.
Okay.
With a conforming loan, you can actually cancel your PMI once you reach 20% equity in your home.
Oh, wow.
That can save you a significant chunk of change each month.
That's really good to know. So there's a light at the end of the tunnel.
Right.
Okay, so let's talk about non-conforming loans now.
All right.
These are the loans that, shall we say, march to the beat of their own drum.
Yes, I like
So
that.
they don't fit neatly into Fannie and Freddie's boxes.
Right.
This category includes jumbo loans, which are for those needing to borrow more than the conforming loan limit,
Yep.
and then various government-backed loans, such as FHFA and USDA loans.
That's right.
Okay, so jumbo loans, those are for the folks buying those like sprawling estates.
Well, not always sprawling estates, but
Okay.
definitely for properties with a higher price tag.
Okay.
And so since those loan amounts are bigger, lenders see them as carrying more risk.
Okay.
So that's why jumbo loans often come with higher interest rates.
Oh.
And you'll typically need a larger down payment too.
So higher loan amount equals higher risk equals higher interest rate.
Right. It's all about balancing that risk for the lender.
Gotcha. Okay. So what about those government-backed loans you mentioned?
Yes.
What's their deal?
So those are designed to help people who might not qualify for a conforming loan,
Right.
perhaps because they have a lower credit score or can't afford a large down payment.
Okay.
So it's like a helping hand for aspiring homeowners.
Gotcha. So they open doors for people who might otherwise struggle to get their foot in the door
Exactly.
of homeownership.
FHA loans, for instance, are known for having more flexible credit requirements.
Okay.
So you might be able to qualify for an FHA loan with a credit score that wouldn't fly for a conforming loan.
Interesting.
You might need a slightly larger down payment, though.
Okay.
And then there are VA loans, which are specifically for eligible veterans and active duty military personnel.
Right.
And these loans come with incredible benefits, including the possibility of no down payment at all.
Wow. That's amazing.
Yeah, it's one way we honor those who have served our country.
That's fantastic. What a great benefit. Okay. So now I'm curious about USDA loans.
Okay,
Those are for rural properties, right?
that's right.
So do you have to be a farmer to qualify?
Not at all. You don't need overalls and a pitchfork to qualify for a USDA loan.
Okay.
The main requirement is that the property you're buying must be located in a USDA-designated rural area.
Okay.
And these loans are designed to support rural development
Gotcha.
and make homeownership more accessible in those areas.
Okay.
And USDA loans come with some attractive perks too often, including low interest rates and no down payment requirements for eligible borrowers.
Wow. So many options.
There are.
It's like a whole menu.
Yeah.
But I'm guessing non-conforming loans, they have some trade-offs too, right?
You're absolutely right. While non-conforming loans offer some fantastic advantages, it's important to weigh the potential downsides.
Okay.
As we mentioned with jumbo loans, interest rates can be higher,
Okay.
which reflects that increased risk for lenders.
Sure.
And while government-backed loans can be incredibly helpful, they often come with mortgage insurance requirements, which can add to your overall costs.
Mortgage insurance strikes again.
It's a recurring theme in the mortgage world.
It really is. So can you give us a quick rundown of how mortgage insurance works with non-conforming loans?
Yeah.
And how it might differ from the PMI that we talked about with
Right.
conforming loans.
So with FHA loans, for example, you'll typically pay both an upfront mortgage insurance premium
Yeah.
and an annual premium.
Okay.
And here's the catch it. Those premiums can last for the entire life of the loan,
Oh, wow.
which can add up to a substantial amount over time.
Yeah.
So it's a key consideration when comparing FHA loans to conforming loans, where you have that option to cancel the PMI once you hit that 20% equity mark.
That's a really important distinction.
Correct.
So we've got conforming loans, the rule followers often offering lower interest rates and that potential to cancel PMI.
Right.
And then we have non-conforming loans, which include those jumbo loans for larger properties and those government-backed loans.
Yeah.
That can be real game changers for certain borrowers.
Right.
So there's a lot to consider.
Absolutely. It's not a one-size-fits-all situation.
Yeah.
But don't worry, we're going to unpack all of this and help you figure out which type of loan might be the right fit for your unique circumstances.
That's what we're here for. All right, so we're going to come back with part 2, and we're going to dig even deeper into these loan types
Sounds good.
and start exploring some strategies for choosing the right one for you.
Perfect.
So stay tuned.
All right.
Welcome back to the show. We are talking all about mortgages today, and I really want to, speak to those people who are ready to take that leap into homeownership,
Yes.
especially for the first time. There's so much to consider.
For sure.
It could feel really overwhelming.
Absolutely. It can be a lot of terms, a lot of concepts to grasp.
Right, and one of the first things to understand is that lenders use a metric
Yeah.
called your debt-to-income ratio, or DTI, to assess your ability to repay a mortgage.
That's right.
Okay, DTI, another one of those financial acronyms.
Yeah.
It sounds a bit intimidating, to be honest.
Yeah.
Could you break that down for us?
Sure. It's actually not as complicated as it sounds. Your DTI is essentially the percentage of your gross monthly income that goes toward debt payments.
Okay,
So this includes things like car loans, student loans, credit card bills,
great.
any recurring debt you have.
Gotcha.
Lenders use this ratio to gauge how much wiggle room you have in your budget
Okay.
to comfortably handle a mortgage payment.
So the lower your DTI,
Uh-huh.
generally speaking,
Yes.
the better position you're in to take on a mortgage.
Correct.
Okay. Are there any specific DTI benchmarks that lenders look for,
Yeah.
especially when it comes to those conforming loans we were talking about?
So for conforming loans, most lenders prefer to see a DTI of 43% or lower.
Okay.
So let's say you earn $5,000 per month before taxes.
Yeah.
A 43% DTI means that no more than $2,150 of your income should be going towards debt payments, including your potential new mortgage payment.
Okay.
This helps ensure that you're not stretching your finances too thin.
Gotcha. That makes sense. So knowing your DTI is a crucial step
Yeah.
in figuring out how much house you can realistically afford.
Sure.
Now let's shift gears back over to non-conforming loans.
Okay.
So we talked about jumbo loans being for pricier properties.
Yes.
But are there other situations where someone might, opt for or even need a non-conforming loan?
Absolutely. Remember those government-backed loans?
Uh-huh.
FHA, VA, and USDA?
Yeah.
These are designed to make homeownership more accessible for a wider range of borrowers.
Okay.
They can be incredibly valuable for people who might not meet the stricter criteria of conforming loans,
Okay.
perhaps due to a lower credit score or limited savings for a down payment.
So not everyone fits neatly into that perfect borrower box.
Right.
And life happens.
Yeah.
So let's say someone's concerned about their credit score.
Sure.
Maybe they had some financial bumps in the road a few years back.
Okay.
Could they still qualify for a mortgage?
Absolutely.
Okay.
It's important to remember that one financial blip doesn't necessarily define your entire financial future.
Yeah, for sure.
There are options out there.
Yeah.
FHA loans, for instance, are known for being more lenient when it comes to credit scores.
Okay.
You might qualify for an FHA loan with a credit score as low as a 580.
Wow.
Although keep in mind that a lower credit score might mean a larger down payment requirement.
That's good to know, though. It gives people hope that they can still,
Yeah,
achieve homeownership even if they don't have a pristine credit history.
exactly.
All right, let's talk about VA loans.
Okay.
These are designed specifically for veterans and active duty military personnel.
That's right.
What makes them so unique, and what are some of the key benefits that they offer?
VA loans are truly exceptional.
Okay.
They're backed by the Department of Veterans Affairs,
Okay.
which means lenders face less risk when offering these loans.
Okay.
So this allows them to provide incredibly favorable terms to eligible veterans.
Okay.
One of the most significant benefits is the possibility of obtaining a VA loan with no down payment at all.
Wow.
This can be a huge game changer
It's huge, yeah.
for veterans transitioning to civilian life or looking to buy their first home.
That's a remarkable benefit.
Is
It's fantastic that we have, programs in place
Yes.
to make homeownership more attainable for those who have served our country.
Absolutely.
Now, it sounds like VA loans come with some other perks too.
Yeah.
What about interest rates and mortgage insurance requirements?
So in addition to the no down payment option, VA loans typically come with competitive interest rates,
Okay.
often lower than what you might find with conventional loans.
Awesome.
And here's another great feature: no private mortgage insurance requirements for VA loans.
Wow.
This can save borrowers a significant amount of money each month.
It sounds like VA loans offer an incredibly powerful pathway to homeownership for veterans.
Absolutely.
Okay, now I'm curious about USDA loans.
Okay.
So we briefly mentioned that these are intended for rural properties.
Yes.
But what does that actually mean?
Right.
What are the specific requirements for USDA loans?
Okay.
And are there any unique benefits associated with them?
So USDA loans are a fantastic option for those who are drawn to the peace and quiet of rural life.
Okay.
The main requirement is that the property must be located in a USDA-designated rural area.
Okay.
And don't worry, rural doesn't necessarily mean you'll be living miles from civilization.
Gotcha.
Many charming towns and suburban areas fall under the USDA's definition of rural.
That's interesting.
Yeah.
So it's not just about, farming communities. There's a broader range of
Yeah.
locations that might qualify.
Exactly.
What about the financial aspects of USDA loans?
Yeah.
Are there any particular benefits that stand out?
Absolutely. Like VA loans, USDA loans often come with very attractive terms.
Okay.
They frequently feature low interest rates, sometimes even lower than what you might find with conforming loans.
Wow.
And for eligible borrowers, USDA loans often don't require a down payment, making homeownership even more accessible.
It's incredible that these different loan programs exist
Right.
to cater to, a variety of needs and circumstances.
Yeah.
It seems like there's truly a path to homeownership for almost everyone,
Absolutely.
regardless of their financial situation or background.
Yeah.
So we've covered so much ground. From, understanding what DTI is and why it matters,
Right.
to exploring the nuances of non-conforming loans, especially those government-backed options.
For sure.
It's a lot to digest,
It is.
but I'm already feeling more empowered
Good.
and informed.
That's what we're here for.
Yeah,
We believe that knowledge is power,
for sure.
and we want to equip you with the information you need
Okay.
to make confident decisions on your journey to homeownership.
Well said. It feels like we've only just scratched the surface
I know,
of
right?
this fascinating world of mortgages.
It's a big world.
So what else do we have in store for our listeners?
In part 3, we'll delve into the strategic side of things, exploring how to choose the right loan for your unique circumstances,
Oh,
and share some tips for navigating the mortgage process with confidence you won't want to miss it.
all right, so we're back. And now we're going to try to answer the big question.
Okay.
How do you choose the right loan for you?
Yes.
Because, like we said, there's a whole buffet of options.
A lot of different choices.
Yeah, and it's not just about, picking the loan with the lowest interest rate or the smallest down payment.
It's not a one-size-fits-all situation.
Right.
Yeah.
So where do we even begin?
Yeah, so the first step, and I can't emphasize this enough, is to honestly assess your financial situation.
Okay.
Figure out how much you can realistically afford to borrow.
Okay.
That means taking a close look at your income, your expenses, your savings, and any existing bets you might have.
Yeah. It can be so tempting
Yes.
to get caught up in the excitement
Oh, for sure.
of house hunting
Yeah.
and maybe stretch your budget a little further
Absolutely.
than you should.
You want to make sure that homeownership is a joyful experience, not a source of constant anxiety.
Exactly. So you've got a realistic budget in mind.
Right.
You know how much you can comfortably afford.
Yeah.
What's next?
So before you start shopping around for a mortgage, it's a good idea to get pre-approved.
Okay, pre-approval.
Yeah.
Why is that so important?
So getting pre-approved is a really powerful move, especially in a competitive housing market.
Okay.
It shows sellers that you're a serious buyer
Okay.
and that you have the financial backing to support your offer.
So it can give you a leg up.
Yeah, it can give you a real edge.
Okay, so I'm pre-approved. I know my budget. I'm starting to look at houses.
Okay.
Now I need to decide.
Yeah.
Conforming versus non-conforming.
So if you qualify for a conforming loan, they often offer the most favorable terms.
Okay.
They tend to come with lower interest rates. And remember, you have that option to cancel your PMI once you build up enough equity in your home.
Okay, but what if my dream home
Mm-hmm.
costs a bit more than that conforming loan limit?
Right.
What are my options then?
You could consider what's called a piggyback loan.
Okay, a piggyback loan.
Yes, this involves taking out a second mortgage to cover the amount that exceeds the conforming loan limit.
Oh, interesting. So you could have a conforming loan for the majority of the purchase price
Okay.
and then a smaller second mortgage to make up the difference.
Okay, so it's a way to kind of tap into those benefits
Right.
of a conforming loan, like
Exactly.
those lower interest rates,
Yes.
but still get the financing you need for a pricier property.
Correct.
Are there any downsides to piggyback loans?
So you'll want to carefully compare the interest rates in terms of both loans
Okay,
to make sure it makes financial sense for your situation.
gotcha.
And remember, you'll essentially be managing two separate loans.
Yeah, 2 loans, 2 sets of payments.
Exactly.
Okay, let's talk about the government-backed loans again.
Okay.
We know they can be really helpful for those who, might not qualify for a conforming loan,
Yeah.
but when do they really make the most sense?
So if you have a lower credit score or you're struggling to save up for a large down payment,
Okay.
then FHA, or USDA loans might be your ticket to homeownership.
They offer more flexibility.
Okay, but they come with mortgage insurance requirements,
Right.
which can impact your overall costs.
That's true.
So how do you weigh those potential costs
Right.
against, the benefits of a lower down payment?
So you might get that lower upfront cost with a smaller down payment,
Okay.
but you'll likely be paying for mortgage insurance potentially for the life of the loan,
Okay.
which can add up over time.
So it's not just about that down payment.
No.
It's about looking at that bigger picture
Right.
and those long-term costs.
Yes, definitely look at the big picture.
Okay. Are there any other things that people should keep in mind?
Your individual goals and circumstances play a huge role.
Okay.
Are you planning to stay in this home for the long haul, or do you anticipate moving in a few years?
Okay.
What are your priorities when it comes to monthly payments versus overall loan costs?
Okay.
What level of risk are you comfortable with?
So choosing the right mortgage,
Yeah,
it's a very personal decision.
absolutely.
It's not like there's a magic formula.
There is.
It's about finding what aligns with you.
And remember, you don't have to go through this alone.
Well, if it's true.
There are professionals out there who can guide you through the process and help you make informed decisions.
Yeah, seeking professional guidance from a qualified mortgage advisor
Yeah.
can be so helpful,
Huge help.
especially if you're feeling overwhelmed.
Absolutely.
This has been such an insightful deep dive.
It has.
We've covered so much ground
We have.
from, understanding the differences between conforming and non-conforming loans to exploring, specific loan types
Right.
to talking about, making those informed decisions.
Yep.
I feel like I've learned so much.
I'm so glad to hear that. And remember, knowledge is power.
Yes.
The more you understand about mortgages, the more confident you'll feel throughout the home buying journey.
Well said. Thank you so much for being here.
Of course. Thanks for having me.
Any final words of wisdom for our listener before we wrap things up?
Don't be afraid to ask questions. Whether you're talking to a lender, a real estate agent, or a financial advisor, don't hesitate to seek clarification if something is unclear.
Good advice.
This is a big decision, and you deserve to feel confident and informed every step of the way.
This is an exciting time.
It is.
Buying a home is a major milestone.
It is a huge accomplishment.
And with the right knowledge and support, it can be a truly rewarding experience.
Now, speaking of resources, you mentioned Brain Theme Park earlier.
Oh, yeah.
You've got a ton of information there to help people understand these loan options better.
Articles, guides, that sort of thing.
All that, and we actually have a video that goes into even more detail about conforming and non-conforming loans.
Oh, cool. So people can really dive deep into this topic.
That's the idea. We want to make sure people are informed before they make any decisions.
Awesome. The whole idea of buying property in a U.S. territory versus the mainland. Aside from the loans, are there any other unique opportunities or challenges people should be aware of?
Well, one thing to consider is that property taxes in Puerto Rico can be significantly lower than on the mainland.
Oh, that's interesting.
Yeah, it's a big draw for a lot of buyers. And then there's also the Act 60 tax incentives.
Act 60. What's that all about?
It's designed to attract investors and entrepreneurs to the island.
Tax breaks, I'm guessing.
Exactly. So if you're planning to relocate your business or start a new one here, Act 60 can provide some significant benefits.
Wow, so there are definitely some perks to buying property in Puerto Rico.
Definitely. But it's important to do your research, weigh the pros and cons.
Due diligence.
Absolutely.
Now, for everyone listening, if you want to learn more about buying property in Puerto Rico, definitely head over to brainthemepark.com.
Well, lots of great resources there.
It's a treasure trove of information. And with that, I think we'll wrap up this deep dive.
Couldn't agree more.
Well, thank you for joining us on this deep dive into the world of mortgages.
Thanks, everyone.
We hope you found it valuable, empowering, and maybe even a little bit fun.
Yes.
And may your journey to homeownership be filled with joy and success.